is riffing.
My tummy hurts.
Green good, red bad. Hey guys, what's going on? Nick with Off the Chart Trading. I'll be doing tonight's video for Thursday, the 17th of March. Let's just jump right into the ES chart, kind of see where the S&P is and how we're looking. Honestly, this is probably the best we've looked, even though obviously we're lower starting the beginning of the year, or from where we started basically at all-time highs to having a fairly decent dip. But one thing I wanted to show, and I guess it looks probably better if we maximize this and really take a look at it, is, and that's the thing I like about the color-coded candles, it kind of paints a picture, makes it easier to visualize that there's a lot of red and there's a lot of yellow, and you got one green candle there, you got one green candle there, you know, two in the beginning, basically we're hit all-time highs, and then the next day just kind of puked, and then here we are having two. So it's the first time we've had two candles that were green basically since the beginning of the year, so 3 months or so. So basically what this means is that it's still ultimately in a downtrend, but we're breaking above the 80 MA, the 21, and the 34. That's what caused it to go green, basically showing a pretty decent reversal. We have that squeeze heading higher. So really, really nice looking chart in the sense of where we're at. And at this rate, we're kind of looking for anything to, grab a lifeline and try to get us out of this, because we've seen, similar patterns where, oh, this is it. We're looking really good 2 days back to back. And we just can't, we follow that gray line. And we little over here kind of look like we're going to go back to all-time highs again. Everything's going to be good. And that was enough of the dip. And then what happens? Went even lower. Attempted to basically go lower, came pretty darn close to it and reversed. And then yesterday's action, I don't know if we had a video yesterday. I don't know if Ed went into it or not, but to have that type of reversal yesterday was pretty crazy. Basically, we were up, I think, 250 points on the NQ, then dropped down 100 and something points, and then rallied and went out at the highs. So it was actually a really aggressive move. And we'll look at the other indexes too, just to really to see how it played out. And then today, what I was saying in the room is, this is the first thing is like, all right, show me that there's follow through. Because, having that low from the previous day, having yesterday, and then today's action, you want to see follow through, because once again, just for a visual representation of it, boom, one green candle. You don't just want a one-hit wonder when it comes to an overall trend break or a potential bottoming pattern, and just trying to find that, your footing, and to be able to maybe play something directionally long in this type of market. So like I said, that squeeze momentum is nice. I wouldn't be shocked if we are finishing up tomorrow higher above, like we'll say 4,400, 4,425, that maybe this turns up to being light blue, and then we have this squeeze potentially end up firing long. I'm not going to think we're going to go to all-time highs relatively soon, especially with a lot of uncertainty with how much the Fed's going to raise, even though that's one thing I think why we rallied, even though it wasn't the best, and I think that's why the initial reaction was negative. But for them to say 7, I think it's more, I'd be shocked if it's 7. I mean, inflation would have to be pretty rampant for the rest of this year, and I guess towards the end of the year is when they would raise like 0.5 instead of 0.25, a quarter of a point. But I guess it's just kind of hurry up and wait. We're in March, and probably wouldn't be till September, October. That's when they, towards the end of the year, those last meetings, would they end up raising a little more. But I only think that would be a case if, once again, if they're data dependent, strictly going by the numbers. If inflation is in line, then I don't see them raising. Either A, they just stop and just, once again, maybe see where it is the beginning of 2023, middle of 2023, a year from now, give or take, and go that route. But if they rip the Band-Aid off and say 7, but they only do 4 or 5, then that's really, really bullish, So I think it's better for them to come out, even though it's not what we wanted to hear. I was thinking realistically for the rest of this year, I was like almost 100% that it would be a 0.25 yesterday, and it was. And I'm pretty sure they'll do another 0.25 next meeting. And then the meeting after that, probably get to 1, and then kind of from there, kind of pump the brakes, slow down a little bit, and just reassess and what the data is saying. But if inflation continues to run rampant, then they'll probably have to be more aggressive. But at least the worst case scenario is already factored in, and I think that's why we had that big U-turn yesterday. Was mainly because now we know exactly, they telegraph exactly what their plans are. Inflation ends up being really high, well, then this is what we plan on doing for the rest of the year. And I think it was only 3 hikes into 2023. And I think they were going to stop around that. So we'll just have to see. But like I said, if inflation does end up, simmering down, coming back in, in line to lower, I don't see them doing the full 7 personally. But obviously we'll just have to see. And every time we think that, okay, maybe year over year numbers, which, the last report was the PPI, whatever it was actually a little lower. So that's, pretty good as far as that's concerned. But we'll have to see what the next CPI data is. The only thing that kind of throws a wrench into that is this whole, uncertainty in Ukraine and Russia right now, because you got oil. I mean, we've had a pretty significant drop in oil, and shout out, no pat on the back, but did call that Sunday night blow off top in oil of that 130.50. Not saying we can't go higher, but that was the high, and then we didn't retest that. We kind of faded from that. So oil dropped, I think, almost $40 a barrel, but we're here back. I'm looking at the corner of my eye back up to 102 here. So still super elevated, but my point is, the higher oil prices go, the more there is going to be inflation. So if we didn't have everything going on with Russia and Ukraine, oil would probably be at 50 or 60, somewhere in there, which is manageable. So taking all of that uncertainty out, I feel pretty confident that next month, the month after, and so forth would be in line or lower. Thus, the Fed would probably only raise another 3, maybe 4 at the most. So you would finish the year about 4 or 5. But there's just so much uncertainty right now. The I guess logical aspect of would be that for me that this Ukraine and Russia thing comes basically to an end probably sometime next month, and the next month going into May. But that's the thing, we don't know. How do you put a time frame on potential war? Do we get dragged in? Does it escalate? Do they act like everything's going to be better, and then they drop some bigger stuff? So that's the uncertainty, and I think that's obviously going to keep the wings clipped of the market until it's no longer factored in, because the market's always forward looking. And I think that's, like I said, the reason that we did end up having that U-turn yesterday was because it's like, all right, cool. So we know exactly what's going to happen. Worst case scenario, we see 7, and then, realistically, if it's not as bad, then it could be lower. So, all right, cool. We know now. We have a playbook for the rest of the year, and now money can be deployed into the markets accordingly. So we'll see. I was very worried that there would be no follow through, that we'd come up. I was thinking the 21 would be good, but then we shot up and closed right at the 34, and then here we are. Basically, we did drop back down to the 21, which had me a little like, bounce right back up, and we closed above the 34. So this is exactly what you want to see, and I'll end the video on the market profile, and we'll take a look at that as far as where the most time and the most volume was spent. I think it paints a different picture, confirming this type of action, but really, dragging the point home. But anyway, that nice squeeze setting up, nice reversal from these lows. And we'll just have to see how it follows through. Monthly looking pretty good too. Like I said, yeah, there's buying wicks. Finding support around that 21. It'd be nice to close. What is it? The 8s. I'm going to round up and say 3,800. Or excuse me, I'm looking at the wrong thing. I was like, that doesn't make any sense. 44.22 as of right now, 0.5. Obviously, these numbers will change daily, but my point is, at the rate we're going, if there is follow through and things don't get worse with Ukraine, I wouldn't be shocked if we end up finishing the month above 44.20 or 44.25, whatever it ultimately ends up being towards the end of the month, which we got about roughly 2 weeks left. So we'll just have to see how this pans out, but this is looking pretty decent. We have tomorrow, which is quad expiration. That's another thing I'll talk about once we look at the internal screen. But so far, this is probably the best looking monthly, even though this is incredibly bullish, and this is incredibly bullish, overall from where it was, where the week started and where it's ending, is pretty good as well. So we'll have to see, and ultimately it looks like we might actually close above the 8. All the EMAs are kind of crossed right here, but that is something to pay attention to. Pay attention to the squeeze and go from there. ES definitely looks a little better than the NQ. We know tech's been hit a lot harder. For percentage points, I know this has changed, but I'm just gonna have somewhat of an average. I'll say the S&P was down roughly 10%. The Nasdaq was down double that at 20%. So it looks good. It's not as good, but you kind of see that same pattern playing out. That squeeze momentum shift higher. Same thing. We're still not above the 8 on the weekly. Monthly, somewhat similar, even though we did breach the 21 a couple times over the last 2 months. But overall, looks decent. Not as good as the ES, but obviously, if the ES continues to go higher, then I'm pretty sure we'll end up seeing everything else get dragged up with it as well. Overall, Russell actually has been doing really well the last couple days. You have that squeeze momentum shifting higher, getting that 8 and 21 cross right here as a buy, breaking above the 50. I didn't know. This is the first time I'm looking at this chart. Probably since earlier this week. So I'm just noticing that now that we did close above the 50, the 30. So yeah, the Russell looks really good. And I've said it before that I think small caps ultimately lead us down. We talked about it right after it hit the highs. I mean, if you went by that, then you had almost a 2-month warning that there was some potential weakness. And obviously we started the year and dropped. I talked about that squeeze that it's been in since May. It's coming up on almost a year. Ultimately fired short. I did talk about that a few weeks ago, that typically that move is only going to see about 6 to 8 weeks. So about 2 months on the high end of downward pressure. Well, I mean, 1, 2, 3, 4, 5, 6, 7, 8. So yeah, exactly 8. And then boom, you see the momentum shift higher. And then here we are, clear indication that we are breaking above the 8. So we looked at the NQ, we're not there yet. We looked at the ES, we're right on it. And then here on the Russell, we're breaking above it. So that's incredibly strong. Obviously, I'm team small cap. Almost everything I'm in is a smaller cap company. It might not be in the Russell specifically, but my account, so goes the Russell, so goes my account most of the time. And the fact that it was having a very strong day today and yesterday, obviously doing quite well. I don't really pay too much attention to it because it is ultimately a longer term idea with a lot of these ideas, but it's obviously nice to see that turnaround since it has been kind of rough over the last couple months. Dow, I don't really pay too much attention to. It's actually been kind of slow. And we talked about this one firing short, but because of the other indexes, I don't think you're going to see that 4 to 6 weeks. And like I said, it's a rule of thumb. It doesn't have to be, it's not an exact science. If it was, everybody would use it and it wouldn't end up working ultimately. But you're already seeing that shift higher. It is above the 8. So it looks very similar to the Russell one. It's not above its 50 yet, but it is coming up. And it's looking pretty good. You can notice that squeeze momentum shifting to light blue. So we might consolidate, and ultimately maybe next week or the beginning of April ends up being fairly strong. And like I said, doesn't mean that we end up taking out the highs, but maybe we end up coming back up a little bit, kind of consolidate in this area. Just using the 36,000 as an idea somewhere in here. And when you look at that, I mean, that is pretty close to all-time highs. So stranger things have happened. That pattern has played out where we see some weakness, see some weakness, see some weakness, and then ultimately, I mean, that is literally summing up 100 years of the Dow is you see some weakness, new highs, see some weakness, new highs. So maybe that plays out. We're not too far away from that, so we'll just have to see how everything how everything falls into place. Take a look at the internals. Like I said, overall a fairly solid day. It was slow. The tempo was very slow. I don't really look at volume in this, the sense, and I can probably actually look. I'll save that for when we look at the market profile. It's easier for me to see volume on that, but it didn't feel like a very heavy volume day. It felt fairly quiet and uptrending, which it's not the most fun as far as a volatile market. You see 10-point move, 15-point move instantly. You might see that over a couple hours. Maybe not that extreme, but you get the idea as far as a slow grind higher. And ultimately, I think that was very bullish today. It's not as fun, but that's ultimately, structurally speaking, what you want to see the markets do, because what it is signaling as of right now is higher prices are being accepted right now. So obviously, the further we go away from the opposite of that, lower prices, the more bullish it is, and potentially more money piles on. I think there's more money on the sidelines than there has been in a very long time. We talked about, small caps at 10, 12-year lows as far as, the scales and stuff like that. So is this a short-term rally? Is there, more news to come? Next week, does somebody come out with a report, saying, recession fears are X, Y, and Z now and potentially higher and all this other kind of stuff. So obviously the market's going to be sensitive to any of that stuff, but at least we're seeing what ultimately we want to see as of right now. So we'll just have to see how tomorrow is. And speaking of tomorrow, quad witching. So one thing I'll mention typically in quad witching, which only happens obviously 4 times a year, is pinning plays. So we're seeing a little weakness, and I talked about this at the end of the cast session close today. As I would not be shocked if we did see a little weakness or a tiny bit of strength, depending on where the numbers fall. And you'll keep an eye on this, and it's not going to be an exact science. You'll normally see it more in the bigger names. Like say Tesla's at 685 and it's a fairly good day. Don't be too surprised if Tesla finishes at 700. Apple's at 163. Don't be surprised if it finishes at 160 or 165. So you'll see these, back and forth actions. Sometimes they're volatile. Sometimes it's just that slow, steady autopilot, like a slow move to connect to a certain strike price. Normally they're more obvious, the psychological round numbers and whole numbers as far as, I'll give you an example. I wouldn't be shocked if, if it ends up being, 34,200. Or if we see a little more weakness, maybe it's 34,000. Maybe this is 14,000. Maybe this is 2050 where it's at right now. Maybe this is 4350. Or if it's a little more on the bullish side, maybe it's 4,400. So you'll see market makers kind of push prices to those levels. So be very careful. You should be careful at any expiration, but specifically quad expirations. You want to be very careful not to get caught up because you might see a massive, plus 800 ticks. Everything looks amazing and you'll see a move, but that's a little more than we wanted. And then it comes down a lot quicker. So just be careful with directional play, especially any lotto plays. Directionally, like SPY calls or Q this, Q puts, whatever the case may be, unless it ends up becoming a trend day, which is not normal for quad witching. You just want to be very sensitive to certain price action in the sense of round numbers, whole numbers, whatever the case would be as far as that magnet of price. Once again, a stock's at $198 and, don't be surprised if it finishes at 200. And that doesn't mean exactly 200 on the, wow, that's amazing. It could be, 199.93 or it could be, 237 cents, something like that. But my point is it would be very close as they can possibly make it to those prices. So, be aware of that. Obviously, we're seeing a little bit of weakness after hours here. It's a little after 8:30 here. So we'll have to see how this all plays out. But if this ultimately does play out to the lower side, don't be shocked if the Dow's down a couple hundred points tomorrow at 34,000, maybe even lower than 14,000. Maybe it's 13,800, whatever that number is. And you can see there's a site, and maybe next video for Ed, he can talk about it for Max Pain, as far as certain pinning plays and stuff like that. The other option is to look at open interest and a lot of stuff. If you see like the 34,000 has the most volume and the most open interest, well then there's a high probability that's kind of where money's playing and where they'll try to once again, just think of a magnet and it's pulling it one way or the other. So as we get closer to that 4 o'clock period, you'll see price move a little more aggressive to, once again, I'm using air quotes, where they want it to go. So, you want to be with them, not against them when it comes to that type of action. But just be careful. Sometimes it's not even worth trading it. And then other times it's just best, once again, to follow the flow. I mean, you should be following the flow regardless. Never try to be against it, the trend in that sense. But even more on days like this. Overall, I'm glad after that initial spike after the rate hike, this is around 2 o'clock, 2:30 is when it hit, 22.46. So that's the equivalent of basically 2.25, round up a little bit as far as percentage on the 10-year. The fact that it was a little down today is good. Hopefully this was kind of I don't want to say blow off top, but hopefully that is the high for a while and it comes down, because ultimately that will help interest rates be lower, potentially help mortgage rates. And then once again, as somebody who's selling their house, obviously the more people that are potentially able to afford it, the better. So that's, once again, personal reasons and personal gains of a potentially lower rate, but that's obviously good for everybody involved. Maybe other than the banks, but they'll still make their crazy amount of money. Put call at 0.76, so still, once again, scales somewhat, balanced, but I will say it's still balanced to the side, not really balanced, but more leaning, maybe a 60-40 to more bearish, meaning that will have to change. So I wouldn't be shocked if tomorrow we're flat to down, and then beginning of next week, if this momentum continues higher, that put call ratio gets down to like 0.6, 0.55, something like that. So once we get down to a lower, neutral rating, that's when we might have a little more sideways action. But there might still be a little more, gas in the tank to potentially push us a little higher as that balances out. Probably not the best analogy to use right now because it'd probably be quite expensive to move it, but you get the idea. Gold's been kind of funky. It's been moving nicely, like it really moved nice over after hours. And then this morning I woke up and noticed some weakness, and I noticed gold was up quite a lot versus where it should be, versus the rest of the market. So that was something that kept the markets under a little pressure this morning. I personally feel, because if money's going to gold and money's going into some other commodities, it's not going into the equities. I know it's a weird way of looking at it, but I just figured if gold's lower, people are taking potential money and putting it into equity. So, I would prefer gold and oil and some of these other things to drop, so money goes into the equity markets. The dollar, once again, after it kind of, I don't want to say blow off, but having that strong upward move, has pulled back a little bit. That's ultimately good for equities. Not great if you're traveling. I jokingly said, if you guys are making any plans, when it hit this high, a 52-week high, that's the best time to travel internationally, or potentially transfer your money into euros or whatever the case may be, because when it's around that price, it's almost the same per euro. So anyway, Bitcoin's kind of been all over the place. Overall, I think it's been up pretty decently. I mean, this is only going back a couple days, but considering where it was at to get above 40,000, it was at 41,000 earlier. I think overall it's doing pretty good, all things considered. I personally don't like that it completely follows the trend, but not always, but it feels like a future. It feels like one of my stocks, like as far as a growth stock, like it's very sensitive to what's going on, where people are trying to look at it as a store of value, almost a digital gold, if you will. So you would think money would be flowing into this in inflations, but it's quite the opposite. The 10-year goes up, NQ's down, Bitcoin might be down, so it's still kind of correlated to that. I'm sure as time goes on, they'll kind of detach, but right now it feels like it's a growth stock, or a high multiple tech company in that sense. Seeing a little more weakness here, as you guys can see. Look at that drop in the NQ and breaking below 14,000 here. Down 26 points on the ES. So, like I said, I don't think it's going to be a massive flush and, going to undo everything we did today, but something to keep an eye on. Like I said, I don't put too much weight into this action. It gives you kind of a gauge, but there's been times that, I go to sleep and the ES is down 60 points. I'm like, oh man, I'm going to wake up and it's going to be down 100, and then I wake up and it's up 20 points. So don't put too much weight into that. We'll finish on profile. Don't forget, that was the other thing I was going to switch to the M period. Tomorrow, the H period ends. So anybody who does futures trading, just be careful of that. You don't want to hold anything into expiration. You should have, beginning of this week, already switched to M. That's my rule of thumb. Most people do it, a week before, meaning last week. I just wait till that Monday to make the switch. So I've been on it. And you can kind of see in the profile too. Look, there's not that much volume. So the profile looks kind of weird. And then it starts looking a little better as of early last week. It starts, but it's still kind of choppy, and then it really starts looking, I guess, normal beginning of the week before expiration. So I kind of switched that Monday. But anyway, like I said, we had that initial move, when he was talking. I mean, K period, that's right after, it's probably, 2:30 or so, that drop all the way down, and then 2 o'clock, I think, is K period, but that massive drop down, and then all the way up here to basically go out near the highs, which is crazy. Like I said, the VPOC, everything else was up there. So overall, super solid. Let me refresh this. I always forget to do it before I start the videos. I'm just curious to see exactly if that's right as far as where VPOC and everything ended the day. Come on, load. You can do it. There we go. Yeah, look, 7 contracts at the lows. Done in the first 30 minutes of the day, and then after that, kind of just straight up. So one of the takeaways for me personally was, you have this massive move. You can see where the most volume was, where the most time was spent was, right here at 43, 20, 25 was the most time spent yesterday. Most of the volume was on the upper end. So just looking at the profile itself, massive move, and obviously settlement up here. What you want to see, and we saw that overnight, was, we didn't really go below. Look where that low was. Basically, and that's why I like the profile so much. Look at that. Look at that low. No chart would show you that. That's where the profile comes in. Where the most time was spent was the low of the overnight period. Isn't that cool how that works sometimes? Sometimes I give these levels that you will not see in a typical chart. That's why I like market profile so much. But anyway, what I look for when I see a spike or something crazy into the end of the day, whether it's bullish or bearish, you want to see the overnight period build out around this area. So where did we do? We did exactly that. Settlement was right here. The most time was spent right here. So within the 10, 15 point range, yeah, we went extremes on the bottom and the top, but the majority of the time last night, basically by last night, I mean from like 6 o'clock p.m., 6 p.m. last night into 9:30 this morning, this was all that period. It built out right up here. That's incredibly bullish. We open up a little lower, come down a little bit, literally 7 contracts at the lows. Sucks to be that person trying to go short. And then what happened? We move up slowly but surely, end up heading higher. Look, only 5 TPOs. That's not much time. So not, that's typically, you're going to see that on a move like this where you end up seeing, that there wasn't much time spent. You see 2 periods, 3 periods. That's typically a trending day. But ultimately, VPOC, I didn't even notice that until I refreshed. Look at that. Basically at the highs. That's a lot of buying during the last, not only at 4 o'clock, or I should say from basically 3:30 to 4, and then end period goes for that last 15 minutes. So you have the most volume. From a VPOC perspective, it's not a lot, but you have the most volume at the very top of that range. That's incredibly bullish. You have settlement down here. So we did dip a little bit, I think at 4:15 or whatever. That's ultimately when settlement is for this. Technically, it trades till 5 and it starts over here, but we're still seeing it, even though we are dripping, a little lower here. This massive, we're still above half back, which is another point of reference I pay attention to. So you have that line right there, which is 43.6625. So we're still holding half back. We're still right around the highs from overnight session from yesterday. So this is still good because, we could come down, it could be like this, where we dip a little bit, looks, oh no, we're going to drop lower, and then boom. I wouldn't be shocked if it stays within this range. Once again, wherever they want it to close tomorrow, I would think 4,400 potentially, but if some of these options were from weeks ago, maybe it's 43.50, maybe it's, whatever the case, maybe we'll just have to see how it plays out tomorrow. But so far, this massive move higher has been accepted. And that's one thing is, you have all this volume and time yesterday come up. You don't want to see it break below any of these levels. It didn't. And then ultimately we came down, we didn't even touch this area down here where the VPOC was in the 43.25 area. We didn't even come down here. We came close, but on very little volume. Well, that was the other thing I wanted to check. So not even 1 million contracts traded today. For reference, look at yesterday. I don't even know. We're going to find out together. 1 point, let's even see if that's right. So 1.4 million. So what am I, a little, like rounding up a bit, 500,000 more contracts than today. Granted, yesterday was a super volatile day, especially after that drop and then pop, but let's see if that was accurate. Yeah, okay, cool. I wasn't sure if that part had to be refreshed or not. That's the other thing I teach too, is that tapering off effect is amazing. Look at, you go from, 4 numbers to 3 to 2, and then, once you see these numbers, almost like a countdown, the 7s, the 6s, the 4s, and you'll see one-offs like 7s. When you see that, tapering off effect of volume, that is an indication of, if you're going short here, you could be in trouble. And then sure enough, 16 at the lows. What was the one from today? 7. That's another thing where the profile shines. Yeah, 7. So not much volume at the lower end. You can see it was all up here. We started to try to go lower on very light volume, and that's typically a sign that the opposite's going to happen. And we'll see that too up here. Look, 67, 108. It's mine. And then what happened? We ended up settling down here. So that's pretty cool with the profile software. But anyway, so far super bullish. Like I said, after yesterday's action, looking for acceptance, which basically means price is accepting. We're spending more time above these levels, which to me is super bullish. Doesn't mean we're out of the woods yet, but for me, this is the biggest and the first indication of potentially being out of the woods. Like, what is that? Like, it's super dark, but we see a little bit of light. Could be a flashlight, could be, something, might not be the sun. We'll just have to go a little further this in time to see how it plays out. But this is the first sign of a potential move higher that I've seen since the beginning of the year. And if you remember, you've known I've been talking about this since the end of December, basically thinking that, we might see a little volatility. I'm not, I'm kind of surprised we saw more, especially in some of the positions. Like, they were already beat up a good amount. So I was kind of shocked that we got beat up even more. But I assumed that it would be kind of on eggshells, not even including Russia and all that stuff, but ultimately waiting for what the Fed decided, because they let us know months in advance when they were looking, bond purchasing and all the other stuff they're doing was going to potentially be wrapped up in March. So when would that be that they would start rates? The obvious answer was March. They kind of told us. So that's why I was kind of surprised by how the market was reacting. to all this because it was all known. So the fact that yesterday happened, now it's no longer an unknown, it's a known, and they've telegraphed for the rest of the year what they plan on doing. So we'll have to see. If it's already factored in because of that drop, then who's to say we don't end up, seeing 5,000 by the end of the year or whatever the case may be on the S&P. So we'll just have to see. But anyway, as always, a little longer video than I wanted, but hopefully it was helpful. Hopefully you got something from it. Like I said, be careful tomorrow with those pinning plays. And for me, the main focus will be on the next week, just to see how we open on Monday, how futures open on Sunday. And then, obviously if we see a certain setup that we like, we'll mention on Slack and in the room live. And as always, if you guys want to join us, offtecharttrading.com. You guys have a wonderful night, and I will catch you at the next update. Take care.